welcome to today's episode of the Simply Financial podcast. I'm your host, Christopher Calandra. Want to increase your financial IQ with today's discussion, which is in regards to CDs, certificates of deposits, because they are relevant again. For a long time, CDs were sort of irrelevant as interest rates have been at historic lows or near historic lows. They really weren't much of a factor. Now, where we find ourselves today is that the Fed has raised interest rates 9 times as of this recording since last year, 9 times for a total of 5%. This includes just last week, the Federal Reserve raising interest rates a quarter point, again, that being their 9th interest rate hike. So CDs have become relevant again. So earlier in March 2023, some statistics came out of nerdwallet.com. I think this was early part of March, but they gave some samples, and 3-month CD rates were upwards of 4.1%. 6-month rates were upwards of 4.85%, and 1 year was upwards of 5.05%. And rates have only improved since early part of March 23, in part because of the recent interest rate hike from last week, the quarter point I already referenced. So not only have rates gone up recently, but it's important to understand that banks right now are aggressively competing for business. They are looking to improve market share. And for the first time in a long time, they are paying rates to attract new customers. I'll give you an example. I spoke with a client of mine in Connecticut, Kim, and they do their banking, her and her husband, at a local credit union. The credit union even did an outbound solicitation call to their clients about their CD rates. That is a sign that things have changed dramatically. Now, here at Elliott Wealth Management Services, as financial planners, please note that we have access to CDs. We haven't used them much the last couple of years, again, because they've been irrelevant and the interest rates were so pitifully low, it wasn't worth it for anybody, at least not with any consistency. So we have access to numerous FDIC insured CD bank options. We can help clients get very, very competitive CD rates, and they can hold it within a brokerage account. This adds to one's convenience because you could own one or more CDs in a brokerage account and have them sit next to, in the same account, other investment vehicles such as stocks, bonds, mutual funds, ETFs, etc. So the rates that I've been seeing recently, and we actually just this week opened up a CD for a client, a 6-month CD. That rate was 5.1%. The 1-year rate I've seen as high as 5.35%. Please know that these are sample rates because the rates are changing. The time I record this compared to when it's published, compared to when you listen to it, the rates may change. So you definitely want to shop around for yourself. But please reach out if you want to discuss CD rates, how we might be able to help you get a terrific rate and see how it could fit into your overall plan. You could call us at 888-959-5904 or go to the website, www.elliottwealth.com. That's 2 L's and 2 T's. You can sign up there for a complimentary consultation where we could discuss this and other financial planning related items. So in summary, CDs are relevant again. So consider them, see if they might be worthwhile for you and your personal situation. Of course, we would love to help to discuss that with you and be a good resource. Thank you so much for listening to today's episode. I'll be back with you on the next episode of the Simply Financial podcast. In the meantime, subscribe to the show if you haven't already, and please recommend it to a friend. Thanks again.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.